we stand for the national anthem?
Stand and sing of Zambia, proud and free, land of wealth and joy in unity, victors in the struggle for the right. We want freedom's fight, oh, one, strong and free. Africa is our own motherland, fashioned with and blessed by those who blend. Let us, all our people, join as one, brothers under the sun, oh, one, strong and free. One land and one nation is our cry, dignity and peace in Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, oh, one, strong and free. Praise be to God, praise be, bless our great Zambia, Zambia, Zambia. Remain we stand under the flag of our land. Zambia, praise to thee, oh, one, strong and free.
We may remain standing for a prayer by Ms. Wembiankowani, member of the Lusaka Chamber of Commerce and Industry.
Shall we pray? Our Heavenly Father, we thank you, Lord, for today. We seek your wisdom and knowledge that before we are able to start this meeting, may you be able to be in our presence. For it is very important that as people walk together, they must agree. For this is an impact that the nation shall be able to benefit. We pray that as we are here and you made us, may the wisdom and knowledge be able to flow among us, the banks and the private sector. In Jesus' name we pray with thanksgiving in our hearts. Amen.
Thank you very much. We may be seated. Senior government officials here present, members of the Bank of Zambia board, deputy governors, members of the Monetary Policy Committee, former Bank of Zambia governors, former Bank of Zambia deputy governors, Chief Executive Officer of the Securities and Exchange Commission, Chief Executive Officer, Pensions and Insurance Authority, Senior Bank of Zambia Management, representatives of cooperating partners here present, Chief Executive Officers of financial institutions here present, captains of industry, distinguished invited guests, members of the press, ladies and gentlemen, good morning. My name is Besnat Mwanza. I am the Assistant Director Communications at the Bank of Zambia. I will be your Director of Program this morning. I welcome you to the launch of the Monetary Policy Report and the first quarter Post-MPC Stakeholder Meeting for 2024. This meeting is part of the Central Bank's efforts to create transparency and open channels of communication on matters relating to monetary policy. We hold post-monetary policy committee stakeholder meetings every quarter in various provinces, a few days after the announcement of the monetary policy rates. This is to allow for dialogue and sharing of information on how the monetary policy decision is arrived at. This meeting is unique in itself in that it is combined with the launch of the monetary policy report, which is being done in compliance with the provisions of the revised Bank of Zambia Act of 2022. Allow me to introduce to you the dignitaries in front of you. We have the Governor, Dr. Denny Kalyalya. On his right, we have member of the Monetary Policy Committee, Mr. Alex Chakufyali. And next to Mr. Chakufyali, we've got Acting Director Financial Stability, Mr. Goodson Kataya. On Governor's left, We have another member of the Monetary Policy Committee, Professor Munachinga Simatele. And next to Professor Simatele, we have Deputy Governor in charge of operations, Dr. Francis Chipimo. Without wasting much of your time, I will at this point invite the Governor to come and give us the keynote address. Governor, sir.
Let me ride on the protocols that BoZ has just established, but just to express our profound gratitude for you being here. This is a Monday morning, and you coming here is very significant for us. It means that you heeded our invitation, for which we are very grateful. We hope your coming here will be worth your while. I think the issues that we grapple with are issues you deal with in a real life. So we appreciate your being here, and let's see how we together build this economy. It's a great honor and privilege for me to be welcoming you all to this breakfast meeting, where we are launching the first publication of the Monetary Policy Report, MPR in short, by the Bank of Zambia. This is a monumental occasion in the history of the bank and our beloved country. Our expectation is that the publication of the Monetary Policy Report will enhance our transparency, accountability, communication, and well-grounded interactions on monetary policy matters. As we commemorate the launching of the Monetary Policy Report, it is important to recognize that it is a product of the newly constituted Monetary Policy Committee. The committee is established by statute, the new Bank of Zambia Act 2022. This is another significant milestone, as it is the first time in the history of the bank and the country that we have a statutory Monetary Policy Committee. Distinguished invited guests, the bank has been preparing these reports to support its monetary policy decisions, but only for internal use. However, under the new Bank of Zambia Act 2022, it is a requirement that the bank publishes the Monetary Policy Report. As an operationally autonomous institution, the need for transparency and accountability can hardly be overemphasized. This report is also part of the attributes of the forward-looking monetary policy framework that we adopted in April 2012, wherein communication of decisions is an important prerequisite. We at the Bank of Zambia are therefore excited that today we have reached and achieved this significant milestone, notwithstanding the enormous responsibility this places on our shoulders, especially those of the Monetary Policy Committee members. Back in April 2012, the bank adopted the forward-looking monetary policy framework because the monetary aggregate targeting framework it had been using was no longer effective in achieving the inflation objective due to the changes that had happened and were happening to the structure of the economy. In addition, it was observed that the changes in monetary aggregates were no longer reliable indicators of current and future developments in inflation. It has also become difficult to signal the stance of monetary policy, which we believe is critical to anchor inflation expectations. Ladies and gentlemen, allow me on behalf of the board, management, and staff of the Bank of Zambia, and indeed on my own behalf, to recognize the contributions of my predecessors and deputy governors to improving the monetary policy framework over the years and providing the solid foundation for the formulation and implementation of monetary policy comparable to those of other central banks globally. Distinguished guests, the Monetary Policy Committee formulates the monetary policy of the Republic on behalf of the bank and prepares this report. The committee comprises 9 members as prescribed under the Act, 3 of whom should be external and non-public officers. So far, 8 members have been appointed. 2 of these are external, the ones we have seen on the stage here. The 3rd external member is yet to be appointed. Ladies and gentlemen, you might have noticed that in sharp contrast to the previous monetary policy statements, the statement published on February 14th was very compressed. This will become the norm and is in line with our objective of publishing the monetary policy report, which provides salient detailed information on what informs the decision of the Monetary Policy Committee on the policy rate. As earlier indicated, the report presents a detailed assessment of the path of inflation over the next 8 quarters based on a careful and critical analysis of current, domestic, and global macroeconomic developments. It also provides an assessment of the Monetary Committee view on the balance of risks to the inflation projection. Our expectation is that such an assessment will help provide greater clarity to stakeholders on the basis upon which the Monetary Policy Committee arrives at its decisions. It is also expected that the Monetary Policy Report will serve as a credible and reliable reference document for other economic policymakers, researchers, academics, and the public at large on economic developments in the country. The Monetary Policy Report will be published on the Bank of Zambia website soon after each Monetary Policy Committee meeting. Distinguished guests, the monetary policy framework that we are currently using requires a huge amount of high-frequency data to gain an in-depth and better understanding of recent economic developments and to forecast inflation over the next 8 quarters. In this context, the bank has been collecting real sector data directly from firms through the quarterly survey of business opinions and expectations and the credit conditions survey. In addition, the bank undertakes in-house policy research, procures technical assistance from various sources, including think tanks, and reaches out to other institutions for collaborative research. All this point to the fact that we, as an institution, have to continually build the requisite capacity, including in modeling and forecasting. For those participating in our surveys, we want to express our profound gratitude for their cooperation. I should hasten to add that under the new Bank of Zambia Act, it's a statutory requirement for respondents to provide information when the institution formally asks for it. Ladies and gentlemen, in closing, let me comment on our regular engagements that we have with you, our stakeholders, after each Monetary Policy Committee meeting. We appreciate and value these engagements as they accord us an opportunity to explain our policy rate decisions. The ensuing interactions also help us to get the much needed insights and feedback on your understanding and the implications of our decisions on the economy, which serve as important inputs into our future decision-making process. With the publication of the Monetary Policy Report, we hope that you and other stakeholders will be better informed about monetary policy formulation and implementation in Zambia. With these remarks, it is now my singular honor and privilege to officially launch the Monetary Policy Report. Thank you for your attention. God bless.
Thank you, Governor, for those remarks. I will request that you and the members of the Monetary Policy Committee come down to unveil the Monetary Policy Report. Governor, you may proceed to cut the ribbon.
Thank you. Here there's no fanfare.
Come down to unveil the Monetary Policy Report. At this point, I will request that the copies of the report be brought forward so that Governor may distribute a few to the delegates.
Thank you. Okay, sure. Where do we start? Can I start with the board members here? Okay. I think it is biased. In-house, these are people who are incels. Jonathan, you don't need one. Morning. Oh, you already have. Okay. Thank you. Okay. Thank you. So everybody, I think we'll get a copy. Thank you very much.
You may come back on stage, Governor. May I request that the rest of the copies of the report be distributed to the delegates, please? At this point, I'll call upon Director Research, Dr. Jonathan Shpili, to come and speak to a few highlights of the report.
Good morning. I will run through very quickly through the report that you have, just to highlight how this report is structured. So that's the route that I'll take. I'll deliberately skip this slide because the governor is going into greater detail to explain the objectives of the MPR. So, as you have seen from the report, there are two substantive chapters. There are only chapters, actually. There are only two chapters, very brief report. So, the first chapter looks at the macroeconomic outlook, and the second one reviews current economic developments. And the areas that are examined are similar, with one addition which appears in the first chapter. The other component of the report is the appendix. We deliberately included this to just highlight the measures that have been taken on the monetary policy side and foreign exchange since April 2012 when we moved to inflation targeting. This is a good account for people who want to do research and also to remind ourselves of what the bank has been doing since then. So let me just also mention that you may want to compare with the other reports produced by other central banks. You find that they tend to differ somewhat. There's no single prescribed format for this. So for our purpose, we chose to take this approach, where as you open the report, you look at the outlook, and then you end with the backward part, which is the past developments in the previous quarter. As you see, this is what we've outlined in the preface. So you could choose, if you wanted, just to read the first part. You'll not lose anything in terms of what the monetary policy is thinking about, but to be missing out on what has happened in the recent past. So we encourage you to read the entire report so you have a full sense of what has been going on in the economy. So if I may just go back, if I may go to chapter number 2, where we're looking at current economic developments. We are looking at what's happening in the external sector. We isolate within their global financial conditions. We focus on domestic financial conditions. We look at what's happening to growth. We look at budget performance. We again here on the backward part just look at budget performance because we may not have full information at the time that the report is produced. So we limit that to the just budget performance. We don't go into policies as is the case in the outlook. And then we end with domestic prices or inflation. So this chapter provides an analysis of macroeconomic developments in the past quarter, and all this information is relevant to monetary policy decision. So the approach then you see from time to time is that we are making comparisons between the current quarter, or the quarter that's being reviewed, and the previous one. In some cases, we are making reference to year-on-year changes, and we would also be making comparisons with projections that were made for the quarter, where this is applicable. For instance, just to draw your attention to the inflation part, as you read this, you note that the MPC projected that inflation will average 13.1% in Q4. The outturn was 12.9%. And we've explained the variation in the two. And the reason is that based on the assumption that the MPC had, they overstated what the impact of crude oil prices and world food prices will be on inflation. So that's where the variation comes from. So as Governor indicated in his remarks, we have to explain everything that we do as a MPC. So we go to a greater detail to explain the variations. So that's the chapter 2. Chapter 1 is about the outlook. So again, we look at what's happening in the global environment. We look at the external sector. Again, it's quite detailed in terms of the elements that are covered in that. We come back home, again, look at the prospects for domestic economic growth. It's quite extended, and we are looking at the different sources of the projections. We've got the Bank of Zambia projections, which we have started generating. We look at the Ministry of Finance, we look at the IMF, and also Focus Economics. So broadly, we look at what all these 4 institutions are looking at in terms of the growth outlook. Then we also look at the fiscal outlook. Again, here we're relying on information that is coming from the medium-term budget plan. And more deeply, we go into the inflation outlook. So this now puts everything together that has happened in the different segments of the domestic economy as well as the global economy. We pull everything together. We've got underlying assumptions which are explained. They are tabulated and then briefly explained. And then we end with the monetary policy decision. So here, this chapter provides projections and a description of the macroeconomic variables that are relevant to the inflation path. And in this instance, we're looking at 8 quarters ahead. We also articulate the risks that are associated with the inflation projection, and a brief explanation of the MPC decision is provided. So again, as you read this, we'll be making reference to the current projection relative to the projection that was made in the previous period. So because the November MPC report was not published, so we just make reference to the meeting. We do so because we provided some detailed explanation of what the MPC considered then. But going forward, we'll be now making reference to the report itself. So as you read the May report, we'll be providing a link where necessary that this projection compares so with what was provided in the February report. So this is how this will be read going forward. So you note that in terms of style, both chapters end with a subsection on inflation. This is because Developments in the preceding sections, all these elements I've talked about, ultimately reflect in inflation or domestic prices. So that's the style that we've adopted, and this is what you'll be seeing as you read this report. So just to conclude, the MPC, therefore, gives us a sense of two elements. The inflation outlook, which incorporates all relevant information available at the time of producing the forecast. It also includes the MPC judgment in the inflation outlook. We also look at more in detail the risks to the inflation outlook. These are identified and discussed. So effectively, these risks could upset the forecast. So the upside risks may lead to higher inflation outcome than projected, while the downside risks have the opposite effect of pushing inflation lower than projected. And in all instances, when we look at the past, we explain the variation. So finally, this report provides detailed information on reasons underpinning the decision of the MPC on the policy rate. Thank you very much, and enjoy the reading.
Thank you very much, Director, for those highlights. At this point, I will invite the Governor to come and give us a recap of the decision of the Monetary Policy Committee that was made on the 14th of February, 2024. Governor.
This now must be all too familiar to you, so I want to kind of bore you to go through the entire process, but just perhaps to focus on a few items, because since the presentation on February 14th, I think there has been a lot of debate on this matter. So, but perhaps picking from what you have picked from the media and from some of you, hopefully I will do a better job of doing that. Basically, what we are saying is that we, in raising the policy rate by 150 basis points, you see in the report where we started from, we started at 9% when it was first introduced. We have gone down and up. But in this particular quarter, what we saw was that inflation was moving away, further away from our target range, which is 6 to 8%. Now, I think questions are raised about why the 6 to 8%. This also not contradicting what the minister and his team are doing on the fiscal side. We just want to assure that no, there is no contradiction in our eyes, because what we are looking at is the medium to long term. You recall that in September last year, the minister presented a budget with a number of macroeconomic objectives, which included this very target of inflation 6 to 8%. The 6 to 8% is informed by the need to really be consistent with what is our commitment in the region. Under SADC, we have what we call the convergence criteria. Under COMESA, we also have the convergence criteria. Under the Association of African Central Banks, we have the convergence criteria. And all these come from the AU desire to get the Africa we want in 2063. So we are all trying to contain inflation to low and stable level. Equally, on the fiscal side, the 3% that is talked about is what has been established over the years, that if you have to have an economy that really supports private sector driven growth, you don't want the government to be crowding out the private sector. And that 3% is considered to be the stable level that inflation. I'm sure many of you have seen what is happening like in Latin America, Argentina for now. Yes, there has been progress since the new government came in, but inflation is still way up. We saw also next door here when inflation had gotten to hyper level. Prices of goods change literally by the minute. You don't want to have that. So it may seem that we are contradicting what is far from it. Macroeconomic stability is a prerequisite for all these other things. Without macroeconomic stability, you would think that you have moved forward when in fact not, because inflation will eat your value. While you are sleeping, doing nothing, you wake up in the morning, you find that the same money you had yesterday is not able to buy you the same quantum of goods that you wanted. So we have to contain this. Yes, it has severe implications on people, especially those who have a fixed income, because you can't pass that on to somebody else. But for others who are able to generate more income, it should also be an encouragement for you to get more out of your efforts. So I just wanted to be clear that we are not in contradiction whatsoever. We are trying to navigate the economy to a better place. But obviously, in the short term, we may appear like we are taking away and giving the others. Decision making is a trade-off. We have heard also that you have raised this rate. Don't you think it's going to hurt growth? Growth is something we all want, but it is growth that must be stable, robust, and sustainable. If inflation is raging, then you have problems on your hand. You have seen, I'm sure some of you who read, the UAK economy went into recession last quarter, because recession is simply having negative growth in 2 consecutive quarters. So the UAK economy experienced a recession last year. So is the Japanese economy. But these economies are still vibrant, and they are working towards reconstituting their own. Now, here we hear all these things of rising cost of living. If inflation persists to go up, that will continue. But to control it, there will be some discomfort here and there. And this is why when you are on a reform program like we are, the government has to step in to try and help those who are not able to help themselves. That's why the social cash transfer comes into force. So I thought apart from just pointing out that we raised the policy rate, but it's because inflation was moving away from the target range. So it needs to be brought into the range. Ours, as you see from the Bank of Zambia Act, our primary objective is price and financial system stability. And you, through your representatives in Parliament, gave the bank that mandate, that if actually there is a conflict between price and financial stability, preference will be given to price stability, because it ranks paramount into the whole thing. So as we do all what we are doing, as you see in the report, we look at all these aspects. How much do we raise is informed by what we see is happening in the real sector, growth, what is happening to the financial system, If we put this, we subject this to some testing to see if it is at this level, what is the fallout. But remember too that our other role is the lender of last resort. So we are there to provide the liquidity that is needed. Let me also perhaps clear the air on the issue of government withdrawing deposits from commercial banks. This is as this should be, because you see, our signals, we are not in the market, our signals work through the banking system, the financial system as a whole. So if there are idle resources in the balances of the banks, why do they care come to the bank? So that policy rate that we are raising will have no effect. Now, on the other hand, the government also needs to finance many of the activities that Parliament authorizes it to do. So it doesn't do us any good to have this money collected from taxes and then is packed in the banks. It's then not doing its job. Now, in financial markets, a day is enough. In fact, in the stock market, a second, a minute is long enough for people to make billions, if not trillions. And it's also possible to lose that much. So when this money is in the hands of the commercial banks, I'm not putting them down. I'm just looking from the public policy point of view, is that this money can be used for anything, including coming into the foreign exchange market, buy some dollars, then sell them, and you put back the money, you come and get it. That's the role of banks anyway. It can also be used to acquire government paper, so this is a clear case of government borrowing its own money. So you use that money, buy government paper, sell it in the secondary market to another buyer, you put it back, life goes on. But that's exerting a lot of pressure on the government and us who are in the financial sector. So the government has invested heavily in automating its processes. It's one of the first institutions actually to have done away with the checks, because they want these resources to be moving. Because when you had a check, we had the problems. At the end of the year, if it is a typed check, you have to wait for 6 months for that check to turn around. Otherwise, you don't do anything, it would bounce, and that would be a problem. If it was handwritten, we had to wait for 3 months for it to come out, which means that if the government is just focusing on the cash basis, it will think it has money. But on commitment basis, that money is already spent. And this is one of the reasons why we got into the problem of debt that we did, because we tend to focus on the cash. You see, even at a personal level, you wrote a check to somebody, so you ask your bank, what is my balance? But nowadays, you don't even have to ask the bank. You just go to your account electronically. You say, oh, I have the balance. You forgot that actually there is a check which he has yet to clear. Oh, I have money. Then you make another commitment. So by the time that check comes, there is no money. Now, there is a law, of course, to say that if you have issued a check which is insufficiently funded, it's an offense. But there is a caveat to that, which says that intentionally. So you come and say, no, for me it wasn't intentional. So to prove that becomes very, very difficult. This is why we also reduced the value of the checks to 25,000. In fact, we are going to zero very soon once we establish that the systems are working well. Our colleagues, through circumstances next door, they have no checks. It's all electronic. So these are the things that the government has to manage its caches efficiently. Otherwise, you get into these problems. So you have the Treasury single account, you have the infamous, not long ago, in this very room, Zanaco was launching with the government service bus. What is all that for? Is to speed up the use of those resources which are got from that. So we hope you should understand from that perspective. It's not that we want to punish you, it is actually offending the very purpose for which this is being done. So by so doing, we are encouraging the banks to look at other customers. Who are those? You and I, so maybe interest rates on deposits will also go up. Now people will say, no, that will raise the cost of funds. Yes, in the initial stages it will, but at some point it should come to a situation where everybody benefits. So these tensions are inevitable, especially when the going is rough. I think in this very room, when we are doing AIGC, I gave the example. If you don't mind, I can repeat it here, of that we all are flyers here. I'm sure everybody has flown. Before the plane takes off, you have the flight attendants calling your attention to say that, can I have your attention? It doesn't matter whether you have flown several times, please pay attention, because each aircraft is equipped wrongly. But there's one part in all that also which perhaps can be very useful as an analogy here. There where you say that in case of cabin pressure being disturbed, loss of cabin pressure, the oxygen mask will drop automatically from the top. I think they caution that no, put the mask on yourself first before you help anybody else. So the point here is that for us, our primary objective is price stability. So when the crash comes to shove, we wear that cap of price stability. The others become secondary. The other one you may want to try, if you are woken up, especially for men at night, and you have these thieves around, or fire, you want to wear your trousers. You can't put both your feet in one side of the trouser. You will get hurt. So even at that situation, you prioritize one leg at a time and then you run. So I hope that helps you to realize the tension that we have to resolve in these matters. But at the end of the day, we want the same thing: growth that is robust, growth that is stronger going forward. So these are things we have seen. Inflation, which just crystallizes what I'm saying in a tabular form. The top part is what inflation has been over the past period since Q4 2022, and we show here the average and the end period. All of those are pointing to that inflation is moving further away from the target range. So this is in chart form, but in terms of projection, this is what we are saying here. If you look on the right-hand side of the screen, you look at Q1 2024, that's the top line there, after the years, and below is what we had projected when you are in the fourth quarter of 2023. You can see that inflation has shifted. That's the same information which is depicted on the left hand on the chart. The red line, a dotted line there, is what was the projection in Q4 2023, and the black one is what we projected this year when we met as Monetary Policy Committee. Clearly, you see that shaded part, that's the target. It's going away. So how do we bring it back into that range? That's the purpose of doing that. We also raised the statutory reserve ratio. Now, these two instruments, they go in the same direction, but they tend to play different roles at different times. The policy rate takes a bit of time to get going. So when you have pressure, as we have been having in the foreign exchange market, here we should also be very clear. We are not targeting the exchange rate. We are concerned about the exchange rate's impact on inflation, because we have observed that when the exchange rate is moving, inflation also moves. When it depreciates, inflation rises. When it appreciates, inflation also comes down. So that's what is our entry point into this. Because sometimes people say, no, put the rate at this. That's not in our interest. Our interest is how it affects inflation. So that's how we get concerned. Now, so statutory reserve ratio is immediately having an impact on the balance sheet of the banks. Because when we raise that, it means that they have to hold more of those resources with us, which means that their ability to create money, which is the bank multiplier, is reduced. And that's in the situation we are in, we want to see. Because when the exchange rate is moving, there are those people who play the exchange rate. We call them, you call them speculators. They play an important role, but they can also overplay and they hate you. So we need to be concerned about that, and how do we deal with that? Because what is happening is that when the exchange rate is depreciating, people now start getting kwacha, convert it into foreign currency, and hold that, which means that demand is increased. Now, for them, remember, to acquire that dollar, they had to use kwacha. So that's why we have to reduce that kwacha. And we saw also some of the players also, they get overdrafts from the banks to be able to, they will make a comparison, which is worse. Do I get dollars or face this depreciation? Then they will make a calculation and say, no. If it reaches this point, I'm thinking I'm better off getting dollars and hold. So dollars become the store of value. We are trying, but we didn't succeed, but one day we will. And actually our resolve now is strengthened. This quoting and the pricing in dollars is one of the things which makes the economy or the exchange rate unstable. Now, why am I saying that? I'm saying that because in other countries, they have taken measures to deteriorate the economy. You see, when the merchants, you are pricing or asking to be paid in dollars, you're actually putting pressure on the dollar, because the people now, they will look, and when you, especially the exchange rate that even is quoted is sometimes out of line with what's happening in the banks. You set your own and say, no, for me, if you want to pay in kwacha, this is the exchange rate. No discussion. So what does a rational player does? They will go around, look to see where there's a favorable exchange rate, and use their kwacha to buy that dollar and bring it to you. You are happy, you say the prices for you are constant, but you have transferred the problem to others. So that's why, again, inflation for us must be contained so that we don't have. that problem. So the statutory reserve ratio is meant to arrest the liquidity in a kwacha so that you don't have that capacity. Now, all these instruments we are using, for us, we can review them. That's why we do it. Every quarter we'll look at this. Where should it be? Where is the evidence lying? If we assess that that measure is no longer necessary, we adjust it. So this is different from fiscal, which follows different route. So people are sometimes say, why are you doing this? When are you going to change? I can't tell you offhandedly that tomorrow I'll change this. No. Like Jonathan was explaining, we have to analyze that. What are the implications if we do this? What will happen? So until we go through that process, it's not wise for anyone to tell you that tomorrow when I go, I'm going to raise the rate. Maybe they will have had that kind of eye to them, but many central bankers will not tell you that. They will say that no, we'll look at the evidence and be guided by what the evidence shows and what are the risks of each of those. So I thought I should explain that bit. Yeah, the foreign exchange market, again here, you can see that the supply has been low. So people ask, why are you doing that? If you have put in some money, do you have enough that is sustainable? Colleagues, there is no certainty in life. No one can guarantee you anything. If someone says, I'll guarantee you this, you should be concerned. But we work in terms of reasonable expectation. Why do we do these measures? We take these measures in the belief that they will set in motion some action, some reaction. So it shouldn't be looked in isolation. All these policies that government makes, all these policies that we make and implement have effect. So the effect in our case is to change behavior. That's why we do what we are doing, is to influence the behavior of economic agents. So you can't wait in an economy such as ours to say until all is clear, that's when I'm going to do this. Then you wait forever. And then you won't be able to change the course of history. Change of the course of history is by taking action. So you have to take action to get the results. If you want to not fail, the best thing is just to continue sleeping, but you may get too weak because your muscles also want to be moved. Otherwise, you have a problem. So for us here, we are combining all the tools that are at our disposal. One, the foreign exchange is a tool itself. The exchange rate movement is a tool itself. We look at the statutory revenue is a tool. The policy rate is a tool. Then fiscal side is a tool too. When the government raises revenues, that's a tool too. So all these combined, they must work in a certain way to get the stability that you want. Now, if they are not in sync, then these are the imbalances that we do. So our job from the monetary point of view is to navigate this. So we deploy what we call the policy rate or the monetary tools. You go to the exchange rate, you use the reserve that you have to affect change. Then we have to go to the prudential side, the macro prudentials, to see what behavior we can mold out of the banks. All these are available. Sometimes they are used at the same time. Other times you pick one and not the other because the time is not ripe for that. So I just thought it is important for people to understand that we are not in a normal situation, because somehow people want to force that, this is not normal. Yes, we are not in a normal setting. So is everybody around. So you have to do what you need to do for economy to move forward. So this is very important to understand. When we do that, people say, no, me, I'll never do that because it's not sustainable. Then you get things worse. And then again, people will say, where were you when these things were happening? We see people where we caution, don't go into these pyramid schemes. But someone, maybe even in the same audience is listening, he comes and says, no, don't pay attention. You see, look at that one. He benefited or she benefited from this. So you give me this money, I'll multiply it. And many of us, including people who are well informed, they fall prey because you say, I think it can make. That's gambling, what you are doing. That's gambling. The house always wins. You may win a bit, but believe you me, the house always wins. They wouldn't set things where they are losing money. So you have seen in big places when someone is winning too much, they will change the lady who sets the thing, say, no, maybe this person has said that there are people watching with cameras there. Why that one winning so much? Because the house has always to win. Otherwise, you are out of business. So equally, in this, even going into the foreign exchange market, people are gambling, Now, it moved from 27 to 23. Now, what have you done? You see, I've lost money. But we were sending these signals, but people didn't want to believe. So this is the play field, colleagues. It's not very friendly at times, but we have to make it work and work for everybody. So our objective is public interest. We will do what we need to do, not because we want to please any particular segment, but we want our client, the Zambian economy, the people to benefit in the end. So another thing we observed here is that in the current situation, this is the interbank market. It literally froze. So in a situation like that, what do? You keep watching because now everybody now is looking at what is happening. So we move in to unlock that. But there's another phenomenon which you have observed. Everybody is focusing on the tax collections from the mines. So what are you doing with that? But we are not looking at the bigger picture. The 75%, where is it going? Who is getting it? So this is where we are saying, as players, be part of the game to partake in some of these things which will change things. So in an environment like that, what would you do? Because the market is literally frozen. So you have to unlock it so that those who have resources can move. Because in financial markets, difference of opinion is what you want. Because if everybody is thinking the same, then you have herd behavior and you have crisis. But one should say, no. What you are thinking doesn't work. Me, I'll put my money here. Then you get the stability that you are looking for. So I think I've talked enough, the exchange rate and then in the credit developments. We are seeing that the private sector is beginning to think. Then someone will say, but now what you are doing is going to negate this. Well, in the short term it might, but in the long term the idea is actually to grow to be as high as where government was. You see, the red, that was government borrowing. But what we have seen here is that, look on the left side here, the government is trying to put its house in order. But we see on the right, that's the loan to deposit ratio, which means that deposits are not being deployed into the market to do the intermediation that we are talking about. So this is what we want to change as well going forward. so that there is more activity. You may start from a low base, but starting it must, so that we can move in the correct direction. So this is growth. We see that dip, that was when we had the COVID, but then recovered. Now you see everybody, all those dotted lines are projections by different groups, that it all is informed by what assumptions each one is making going forward. But without exception, everybody is pointing that the economy is going to recover. And this is why it's critically important at this point not to lose ground. Because if we lose ground, we will not be able to benefit from the upside that is coming after this. You can see progress is being made in the debt restructuring, which means that that burden which we are carrying, that cloud cover, we are tired of that reference, which it will take years to remove. The only country under COVID which defaulted. And we are also reminded we are the second producer of copper in the world. Those are very weighty things, but are we really not able to do things for ourselves? The answer is we are. But why are we not doing? We have to change our mindset. How do we do? We are looking at times at things we don't have. What about the things we have? I think there are plenty, but we are not using them properly. Yes, people say there is no money, but don't rush to money. What plan do you have? Because we had money, brought money, put it in the bank, and it hurt us. You see, money, as bankers will tell you, is very expensive to keep money because it loses value if it is not working. So we need to be alive. Right now, we have a serious challenge of drought. We need to think differently and act differently because it's coming, it's there. If we don't take measures that will help us get out there, it will get worse. But to every crisis, there is a silver lining. So that's what we should focus our attention. What do we do? We are under attack. How do we get out of this? I'm sure working together, we can find a way forward. So I think this is really the story of why we raised the police rate by that magnitude. And we remain committed. If the situation doesn't get resolved, we'll do other things and even maybe more of this until we get it right going forward. It may be painful, that's expected, but we have to find ways of cushioning those who get hurt in the process. Thank you very much.
Thank you, Governor, for that recap. So you have the presentation. We are here now to hear your comments, your views, or any questions that you may have regarding the decision that was made.
My name is Yusuf Dodia from the Private Sector Development Association. Governor, I think you've said a lot of things, but the message which comes through, which I tended to see being re-emphasized, was pricing as one of the key elements that drives the consideration of the monetary policy rate. I know you have another initiative that's been in the pipeline since October, which was launched ostensibly on the 1st of January. This was the export proceeds tracking framework, which all assessments and analysis suggest that by the end of the first quarter, we should be able to see hyper revaluation of the kwacha. If that's a phrase we can coin. Some of us are expecting the kwacha to get to levels against the dollar of 15 kwacha to $1 before the year end. Now this tends to directly hit the nail on the head in terms of pricing. A country which is net import dependent, such as ours, the value of the dollar is paramount in terms of pricing. It impacts on the cost of electricity, which is, I'm sure under the power purchase agreement, is a dollar-based transaction. It impacts on the cost of fuel, which is also a dollar-based transaction. And of course, it impacts on inflation, monetary policy, and just general pricing based on the imports that we make. So, Governor, I don't hear anything on the monetary policy, on the export proceeds tracking framework vis-a-vis the discussion we're having today, unless I talk to Dr. Chipili. The rest of the Bank of Zambia and the Ministry of Finance tend to be very quiet about it. I hope we can get some comment on that. Thank you, sir.
Thank you. We can get another question.
My name is Jacob Mwanza. I'm sure some of you must have heard of me in the history of monetary policy. First of all, I would like to congratulate the governor for taking bold action against inflation. Inflation is a deadly enemy, and you need to tackle it seriously. The instruments which are at the disposal of the bank have been outlined by the governor, and I think the sharpest of them all is the statutory reserve. Statutory reserve hits the financial institutions very directly. And of course, the consequences of that is that you expect credit squeeze to come in, and that could also impact the prospects for economic growth. So you need to use this instrument. It's the sharpest of those instruments at your disposal in a very sparingly manner. The recent increase in statutory reserve was justified, but the extent is the issue which worries me a little bit. I'm sure I have nagged the governor about that, but I want to really to get an explanation. What is the basis for deciding on a jump of 900 basis at one go? Is what drives the Monetary Policy Committee to make such a huge jump at one go, which might also have negative implications for the growth of the economy? Thank you.
My name is Donald Mumba. I'm the Managing Director for the Zambian Business Times. My question, first of all, I wanted to congratulate you and your team on the launch for the Monetary Policy Report, which is a timely undertaking, especially that we are moving into this age of information quickly. Now, the Bank of Zambia, as you rightly mentioned, its interest as it is making decision is for the general public. And then that can be interpreted as the majority interest of Zambians. So last week, on Friday, your team, I think working together with Zamstats and the other government wings, published a report on micro, small, and medium enterprises. Now, when you look in that report, the survey and its findings, we find that microfinance institutions were the largest lenders to the MSMEs. Now, the MSMEs, from ourselves and the studies that we've done, is composed of mostly Zambian-owned businesses. We do appreciate, I think the bigger part of the banking sector is financing the multinationals and most of the foreign-owned entities. Now, looking at that scenario, if you go down to the interest rates that are being offered by the microfinance sector, you'll find that it's on average 5 to 10% per month. If you multiply that to 12 months, you're getting 60 to 120% per annum. Now, you have to be in maybe drug business or super high margin business to survive. Hence, defeating the purpose of developing Zambia, because you need these Zambian-owned businesses to grow up. So my question, which largely goes to your team, how do we get the monetary policy instruments to start permeating through the banks down into the microfinance and the lenders in the market, so that the wider Zambian community who are getting financing from these other institutions to benefit? I think if you're able to do that, Governor and your team, you will see a lot more appreciation across the spectrum of Zambians. Thank you.
My name is Martin Bamkunde from PwC. Looking at the risks, that's on page 11 of the report, regarding the outlook on inflation. We've covered the risk of drought, but that's in relation to higher maize grain prices. I guess my question is whether that should have been extended to cover the risk on load shedding and what that would mean for inflation going forward. And I guess my next question is, talking about price stability and the rest of it, how far is Bank of Zambia prepared to go to contain inflation, given that you've got SRR 26 and the rest of it? I mean, how far are you prepared to go to keep this in check? Thank you.
Thank you very much. Governor, you may take those questions.
Thank you very much for all the questions that have been raised. I'll get some help from my colleagues here on some of these questions to do justice. But perhaps let me just give you the top line, starting with the Mr. Dodia's issue, EBOP. I think your take is an interesting one on what is expected to come out of that process. But the objective is not quite that. That may be a consequential effect. The objective of EBOP in the first instance is that, you see, when you look at the balance of payments figures that we produce, you see that the other items net in that is a huge number. And that you can't have such a situation where the other items is larger than the non-components, because it becomes very difficult to deploy policy when you don't know what is in that basket. So the other thing we have observed is that when you are running a balance of payment surpluses, the exchange rate here is not affected in any noticeable way. That's anomalous because usually countries who experience surpluses in their balance of payments, it's anchored by what you see in the domestic economy where these exports are originating from. So this is anomalous. So to that extent, you're right, that may change that. But in the first aspect is to get information. What is going on? That's the question. Why is it that we have this situation? So we had colleagues from different departments of the IMF pour their heads on this. They came and they looked at what was going on. We took them to some of the sources of this information. It wasn't an easy thing, I must tell you, that because back in 1994, when we did away with exchange control, there is a lot of sensitivity around this subject because people feel that, no, we don't want to go back to that. And we, as a country, signed on to, when we are doing the HIPIC and all that, to Article 8, which is of the obligations of Article 8. These are articles of agreement of the IMF. So, in signing up to that, you are making a public declaration that will observe certain behavior, in particular, not restricting trade or exchange of payments. So that item is read very carefully. And every year, the IMF publishes the exchange arrangements for all the countries. If you want, it's there on the website. You can get the document to see what exchange regimes all the countries face. So Zambia, you will see there, this is documented what we do. So people are interested to see that at all times we are abiding by what we committed. So we saw that there was a loophole here where somebody who is producing something and it just goes, exports, and it ends there. We don't know what happens once the goods leave the borders of this country, which is anomalous. So we succeeded, said, no. When you export, we want to know whether actually you got paid, in what currency were you paid, what happened to the money that you got paid. So this is why we say that these must be recorded through a local bank. Remember, these are Zambian companies. These are Zambian residents who are exporting. So, why should it be strange to ask these people to share information? After all, the companies, they enjoy benefits, as you know, under different regimes. If you are in export field, you enjoy preferential tax. It's lower. So now, when it comes to say, no, can you tell us what you are doing? It becomes an issue. But you are willing to access the benefits that the country is providing. I think that's not fair. So this is where we are coming from. So indeed, as you have said, by end of this quarter, we should begin to see these returns. Now, obviously, remember what I said about the government deposits in banks. They use those deposits for different things. So there is a float, obviously, that is going to emerge. So maybe that's where you are talking about. So we are conscious of that, and we are eagerly waiting to that. The process has started. Maybe DGO can shed a bit more light on that. We are already beginning to think. We are actually slow in that we are using the TPIN. That's why you will notice some of you, not mean you personally, are resisting even to provide the TPINs to the banks. Why do you want my TPIN? Should that be really questionable? You know? So, but the TPIN is very, very susceptible to manipulation. You know? So that's why we want this national ID, you know, in risk. So we are very, very impatiently waiting now for that to roll out. So the process of registering has gone. If you haven't done so, we would really urge that it be done so that the biometrics are entered. We'll deal with all these things of KYC and so on and so forth. So really that's the thrust of EBOP, but it has got other offshoots like the one you explained, but that's not the targeted aspect. But maybe DGO can shed a bit more light on where we are on the matter. DGO?
Thank you very much, Governor. Really just to reiterate that indeed the process has begun. We've already started receiving inflows through the system. Essentially just a bit of background. We had started running what we're calling the electronic balance of payments as an initial stage, where through the banking system, we simply record information on all foreign transactions, inflows and outflows. Now, what became very apparent that there were gaps when we look at these inflows and outflows, and significant gaps. Typically, the outflows were much, much more than the inflows. And so we then sat and said, we don't seem to have a clear visibility on all of the transactions which we see on the trade side through ZRA, because when you are exporting, there's documentation you fill in through there. So the export tracking was really to try and fill that gap, because by having people pass their payments through the commercial bank, and that's where we collect the information from, we then know what has come in and what they've spent it on, and then we can reconcile basically our balance of payments data. Before, we had seen a significant buildup in balances abroad. We weren't quite sure what that was really relating to, and so this is really helping us do that. The exact amounts we've seen, the companies had, everybody has until the 1st of March because it's 3 months, but already we've begun to see funds going through. I think it's over 100 million, which we've actually seen. However, the system, the way it is, we have to reconcile in the back between trade data and the financial flows, and that's the process which we're just trying to make sure that we get. There's a bit of a technical issue, I think, on some of the unique identification numbers which we need to issue. But I think the team have been working on that. I think the team have also been going around to sensitize clearing agents and all other stakeholders in terms of how the system works, what the requirements are. And in this regard, I would like to very much recognize the work of the commercial banks in helping us move on this process, and we continue to engage with them because obviously it's what they are doing also to help sensitize their clients about what the requirements are. So we have seen above 100 million, which is coming in so far. But remember, at the end of the day, what we want to do is to reconcile the trade and financial flows. So that's what we're working on. There is one other area where we haven't yet fully developed the system, and that's on services. Because on goods side, the custom side is very well developed. We all understand what we need to do when we're exporting goods or services and importing, and the documentation is clear. ZRA have an automated system for that. On services, we still have to develop a framework for the reconciliation bit. So that's something as well which we're working on. I think just last weekend, our colleagues were with the tourism people. There was an engagement, I think, in Chongwe, and they were then interacting with them and trying to just explain the system. So that's where we are, Governor. I think we are making progress. Thank you.
Yeah, there's another aspect to this which we are going to marry the two, the import side, because there has to be a matching. What we observe is that people go to the bank I'm importing something, they ask for remittance, the bank would dutifully do that. But that's not reconciled with what is happening at ZRA. So all this is something now we are going to be reconciling to see that, okay, you have imported, what have you imported? You are getting this foreign exchange. Show us what you have got. So all that is going to be done electronically, no intrusive things, because it's not sufficient, like I said, to have a tip-in, because people can use their employees to get a tip-in, because if they are just looking for a tip-in, you put a tip-in. But there must also some accompanying check. Are you really compliant tax-wise? Because we heard from you, the market players, that there are some who are not compliant, but they are pushing. So we want to level the playing field, that people are all treated the same. You can't have in our setting where 3% is contributing 80%. Where are the rest? You know? So we need to comb all these systems, and the technology is there now to do that. So we'll be marrying all these things. So going forward, you see a lot more activities going on in terms of really getting a good handle on the external sector, how it is performing. Coming to the issue raised by Dr. Maza, thank you very much, first of all, for your compliments. We stand on your good work, sir. And I think your name is a household name, not only from the economic side, but from education. Some of us have certificates which bear your name from university, B colleges. So we are grateful that you are still contributing to this country, your country. So we really salute you for the work that you have done and you continue to do. Yes, we couldn't have put it in better, but the point, Governor, is that we are mindful of the credit squeeze that could come out of that. But there are exigencies that we have to take account. Because if we don't arrest this, and it becomes a runaway problem, then we'll have to do even more drastic measures. I'm sure, Governor, you recall that some time back, statutory reserve ratio actually had reached 40%. We even had grappled to remunerate this by converting them into, we used to have statutory reserve bonds at some point, but obviously it had gone excessive, and we started the process of reducing to the point we got to 5%. Then 8% had remained the thing. So we are very conscious of the impact of that. But when you have a raging situation as we are having, you need an effective tool also that will check that behavior. Because if you don't, it's going to become entrenched, and any measures you try to do will not deliver. We had raised the statutory reserve ratio by 600 basis points in 2023. The market just coughed at it. It scoffed at it. It says, what are they doing? Oh, just factored in. It was factored in. So, well, we hadn't finished. That's why we had to raise this, so that now it calls attention to all those who are playing. But we are watching the situation very closely. Should circumstances warrant us adjusting downwards, we will be more than happy to do that. But we have to address the main enemy. The main enemy is inflation. That's the enemy. If it is not rising, we wouldn't be doing these other things that we are doing. If it remains stable, we'll not deploy these tools. I'm sure, Governor, you know that, when you go into the army, or into battlefield, you stand first a small contingent of soldiers to go and test the enemy. And if they face resistance, they send you information. General, the issues are not as what we planned. So can you send another contingent? Now you can't just send it directly. You might have to deploy them in a tactful way. So indeed, these instruments, we are deploy them, test if they are working. If they are not working, you crank the bit, and then when you get the reaction, then you can begin to change. So we are alive that it has that other effects. It's a double-edged sword. But right now, the problem is much, much more entrenched, and we had to check it, and we'll look at that. So I hope you'll be able to see, not happy, be able to see when things change what we do. You know, people tend also to forget that this country is under default. You know, that's what others are looking. We're under default. All these credit rating agencies, they are saying, but they can see the brighter things ahead. That's why I think say that we need to arrest the situation for others to benefit in the end. I wish I could also ask you questions, but sometimes in this setting, you are only asked questions, but maybe we'll get a chance in the interaction. So I think that's the point. We are alive to its impact. I think the banks, when they came, I think they shared with us that in the region, actually, Mozambique has a higher rate than we have all of us. Is it 39%? You know, so we are not near there, and we hope we don't get there because it will be much, much harsher. So that's the issue. We know it's the sharpest instrument, and the magnitude was informed by the nature and the magnitude of the problem that we are faced with. Mumbai, thank you. Yes, yeah, sure. You see, people may also say, why did we have to do? We are the ones actually who spearheaded that report you are referring to, which was launched last Friday at Intercontinental, where we are showing access to finance. Because I think if people talk generally, you know, we wanted to have more concrete information, because with that concrete information, you can begin to figure out how to deal with the problem. So now, the microfinance, yes, they are the ones, this very high. But I think we need to dispel this notion, which we economists tend to do. You know, when you see that the interest like a day is 5%, you start now annualizing that. It says, oh no, this is crazy. How on earth can one do this? I think we have to step down a bit and look at the nature of the business, some of the businesses that are done. Take, for example, the marketeers who borrow in the morning and repay in the afternoon. Why? Because that's the nature of their business. You know, they are not looking for a loan to say for 1 month, 1 year. You know, which what by annualizing we are doing that. If it was this, so if you look at it from that end, you find that actually there is a very good economic rationale for one to do that. And the microfinance institutions, the risks they run are huge because they hardly know these people sometimes, but as they hone in their business, I think those are going to, but this is also informed by the general high interest. But how did we get here in the first place? One is that the fiscal side was out of line. You know, what does that mean? You see, back in the 80s, we had the cash budget, which was declared, I think, during the time of Dr. Mwanza, Dr. Libintho there. they experienced that where you had a cash budget. The government was running a cash budget. Again, because we had the very bad fiscal situation, which meant that the government, before it is spent, it has to have the money. Now, fast forward, in the recent past, we had similar but not declared cash budget. Colleagues, every morning, the bank provides what we call spendable balances to the ministry. So before they do anything, they look at spendable balances. Remember the story I told you of cash versus commitment. If you are just looking at the cash and make decisions solely on that basis, you have a big problem, because some of the commitments you have made haven't yet materialized, but you are making new ones. And what happened? Arrears. Huge arrears emerged. Now, what is the import of arrears? You see, when you get the government is running arrears, it has in effect given itself a loan. It has defined the terms of the loan on itself. It has even defined the tenor of that loan. They will pay you when they have money. But what is the impact on those people who genuinely provided goods and services? So what tends to happen, therefore, is to price in that. So people, when they are quoting, they will have a margin of risk they are taking. So instead of getting these things cheaply, it becomes more expensive. You know, these days you don't hear government issuing LCs, these local purchase orders. Because you guys, you scoff at it. Say, what? No, put money. You know, because of the history. So the cost of doing business is informed by this. What happened? Not too long ago, maybe some of you have forgotten, we had a treasury bill, 28 days treasury bill, which were fetching very handsomely. So people were separating, there was privatization going on. That's the instrument which was popular. You put your money, 28 days later, you get paid. But when the fiscal got under control, that price plummeted and we discontinued. You don't see it now. So what am I saying? What I'm saying is that there's a lot of noise in the system. This build-up of balances were done. Arrears, the financial sector actually suffered that fate too. Individuals, take a government employee who gets a loan from a bank or a financial institution and signed for deduction to be remitted. You get your pay slip, it shows that the money was deducted, but no remittance was made. And then the bank said, well, you are in default, you haven't paid. He said, but I paid. Well, we didn't receive the money, you are the principal. What happens? Reported to the Credit Reference Bureau. So the Credit Reference Bureau, they note that, no, you are there. We had to intervene to say, no, please recognize that it's not their own making, the government. And we had to plead with the government that, no, can you make good on this and prioritize this? So that's how things started to normalize. But it doesn't end there. We still have government paper fetching way high. If you look at the interest rates there, you see the bond weighted average was even higher than the average lending rates of the thing. Now, if you are a bank, I mean, why would you want to chase a risk person when you can make money easily on the government, which is not risky? So this is the anomaly which is there. So part of our process is to visualize a funnel, You know, a funnel, you have the bigger side and the smaller. So what we are trying to do is to sweep all this money so that they come into the funnel, so that wholesale money is coming from the central bank. Then that MPR that we are setting will have meaning. But if there is noise around, it doesn't have the full impact. Why are people concerned about the federal funds rate? It's because of that. Why in South Africa they are interested that is because of that. These loopholes are sealed so that wholesale money is known where it is got, and it was a known price, so that you can price off that. So this is what we are working towards, and the government putting its house in order, which they are doing now. You have a deficit, but the deficit is on things which are in the budget, not off the budget. Arrears are being cleared, and you see, once you have arrears, other things also happen. There's a lot of noise in there, you know, because not all that you see there is genuine. I think my brother from PwC would attest to that. When they audit these things, you'll find that they are not what they say. People supply the air and they are getting paid. So it also creates an avenue for corruption, because people will present themselves and no, give me some, I will help you to get your payment. You know, all that is noise to the system. So you as a private sector player, you are aware of these things. So how do you cover yourself? You know, so you cover yourself by pricing it in, so that if you get payment, at least it already covers you. So we have to get rid of that and get people to do things in volume terms, not one-off. That's what will get us. That's why the fintechs, we are encouraging, the fintechs are coming, and that's why we have the regulatory sandbox to encourage people who have ideas. Because the fintech, what they are looking at is that if you are spending 1 kwacha, I should get at least 10 in way, you know? But a bank, that's too small because of the overheads that they have. But the fintech has got the technology to be able to collect that. So this is where we are trying to move. I hope that helps you to understand that that 5 to 10% is monthly. If the business that you are doing is short term and all that, you'll find that you can absorb that. But definitely as an analyst, you look at that, you are going to annualize that. You says, whoa, this is crazy. How would one going to do this? But you have to segment the issue to be able to get that. But that's not to say that those interest rates need to continue to be that high. And in our setting here, there's the risk return arrangement. Actually, it's very clear. Those who take risks, they are able to make. In developed countries, you work off the margins. The margins they see here says, wow, if I could do this. You can't do that in Europe. It's unheard of, because the system is so advanced. You are working on the margins, but we still have the scope to do something. I don't know if TJ want to add something on that.
No, Governor, I think you've covered. I mean, the broader issue is just obviously going forward. As you indicated, the point about the survey was really to give us a richer set of information to think about how do we mitigate the risks which are there. And so I think, as has been announced before, we're now just in the process of concretizing our credit guarantee scheme, which we had indicated we were working on with the private sector. Again, this survey and the data which was there was quite a good input into that study on how we actually define a sort of a guarantee scheme to support small scale. So, you know, the need for data and the ability to use it to actually solve the problems there is quite important, and that's why we thought it was an important study to do. Thank you.
Okay. Yeah, Martin from PwC, the risks. Yeah, maybe we highlighted the drought from the agriculture point of view. You are right. The load shedding is another risk that must be factored in. I think indirectly it's being factored. We may not have said it, but we get information from the Kariba River Authority to see the water levels, what ZESCO's plans are. But I think it's important also to point out that there are developments in that space as well, in that the energy sector reforms are driving the use of other alternative means. It's still quite expensive to go solar, but there are some small operations which are going in that direction. So the recent pronouncement that you can actually link, if you have a small plant to the grid, I think it's a welcome move, so that those who are able to invest in small plants, and I think there are people who are capable of doing and are doing something, but because there was that problem that you could not link that, then people were getting discouraged. So as I said earlier, when you have a crisis, it's also a time to look at other things. So we hope that that avenue will, in the discussion we had last week with the Economic Growth Forum, actually they showed how, for example, even China started, it was low key, but ramped up this alternative. And we have the scope. If you are talking of lithium being here, copper is used in the thing. So if we start the processing of some of these things domestically, we have ample sun, I'm sure we can get it to a better place. So I think these things shouldn't be looked at in isolation. Government policies, we're looking at fiscal, general government economic policy, structural measures, monetary policy, all are supposed to work together, because the economy is a system. The economy is a system. Whatever happens in one part plays out somewhere in the other side. So for some of us who are like the central bank, this is a macro institution. We look at all the sectors. For convenience, we divide the economy into 4 sectors. 1, the real sector, which is what we are talking about, and that's where inflation comes out, the aggregate price level, the change in that price. Then we look at the external sector, the exchange rate comes in. Then we look at the financial sector, the interest rates come up. Then when we look at the fiscal side, we see the deficit there. So all these variables have to talk to each other and talk in a better way. If you just visualize a car, if one of the components is not working well, you have a breakdown. And these imbalances we see in these prices popping up unexpectedly, and each one of us, given our respective mandates, we are supposed to play that part. So you asked the question at the end, how far are we willing to go? Well, you gave us a mandate. This is what we have to pursue, but we don't pursue it in isolation. So we will not stop until our objective is met. We will have to make noise, we have to take measures to make sure that our target, our objective is met, because that's what we are set to do. We can't sit because others are not doing anything. You blame us. I'm sure you will not be happy if we come next time we meet that, no, sorry, we couldn't do this because the others didn't do. You'll be very shocked. How could you do that? You have a mandate, is very clear. So you'll be calling for our heads. What are you doing? You are given this. So, but importantly, as a central bank, that's why we engage you. We hear all this. So when you say there are problems there, we also behind the scenes point to our colleagues that sometimes people accuse us that, no, stay in your lane. Why are you talking about this? No, inflation is affected by many things. So we have to say, and we give you a path where we are going so that you see what risks. Then you can talk to the other person. Maybe you are in that sector to be able to influence that. That's how it works. We have specialized institutions. We are one such institution. There are people who are in energy, who are specialized. They have to do what they need to do. But at the end of the day, there must be a convergence because we are all working towards one goal, the welfare of the Zambians. Thank you.
Thank you, Governor. We have any last burning question?
Thank you very much, Governor and your colleagues. My names are Felix Mfula. I'm sure you remember me from the bank. Mine is really a statement rather than a question. I'll start by thanking you for your very, very sterling performance. You have eruditely and lucidly explained the matters affecting our monetary policy, in particular the fight against inflation, very, very adequately, and I think professionally. This, of course, I must thank you and your colleagues. We have a lot of confidence in you, Governor, that you are up to this job. Having said that, I do have one problem here, which I see quite very often, and this is the problem of inflation expectation in this country. I know that everywhere in the world, this is a very daring problem. You have to tackle this head on. You have to hold the bull by the horns. And there are several ways in which you could do this. One of the ways I think you have mentioned that you do engage provinces from time to time, various areas in this country where you talk about these issues, educate the public out there. But I think also this country we are unique in that we have a plethora of economists whose opinions here and there sometimes, leave me a gap because people tend to speak. You use the word, they don't keep to their lanes. You find people are talking about things which really are not even on the ground. They have the easiest thing to do, which is to ask you. Or, as I said, try and sharpen also your way of communicating with the publics out there. Send your directors and yourself also. From time to time, we must be seeing you, speaking on various issues so that the public out there perceive inflation in the right perspective. I thank you.
We can have the other questions from the other side.
My name is Collins Swafula, Assistant Director, Policy and Research at ZDA. Just really to thank the governor and his team. And from the ZDA point of view, I think this should really be the way forward, where you frequently engage the stakeholders, the private sector in particular. As an institution mandated to promote direct investment by the private sector in the country. We are really appreciative of this move, as it helps improve actually investor confidence in the economy, which will in turn result in more investments coming in, whether within locally or foreign direct investment. I'm particularly impressed to learn from what my colleague Dudia from the private sector development just raised the issue regarding the tracking of exports. And I recall that in one of the previous meetings at your auditorium, both where the private sector were also recalled as ZDA, we felt that that was a move in the right direction in terms of having the exchange rate stabilize actually. And it is interesting to hear that already there's some recordings of some transactions, and one would possibly feel that possibly even what we are seeing, the appreciation of the kwacha, you never know. As these figures go up, we should be seeing more stability and appreciation of the kwacha. So I just thought I should. But maybe on a lighter note, this elephant in the house, in the economy, the debt, foreign debt. I know this may be an issue of possibly your mother ministry, Minister of Finance. I tend to believe from an economist point of view that the prolonged delay in appreciation of the kwacha has to do with that, as possibly some investors may be to use an appropriate, some speculative motives where they hold on the dollar instead of releasing it on the market. Maybe just a lighter comment from you on that. Thank you so much.
My name is Dr. Sylvia B. Mwansa. I'm an entrepreneur, founder and CEO of SBM Investments, and a member of the Lusaka Chamber of Commerce and Industry. I'm very happy to be here this morning. I had to change a lot of things because I really wanted to be here. I have heard what the governor has said, and I remember very well these interactions and how we are going to be getting out of this. And I just want to give you an actual story of an entrepreneur and ask the question afterwards. I've done research. My research was actually on the impact of the kwacha fluctuation on SMEs trading in areas where there is a dollar component. And Zambia came out as an outlier, except for Zimbabwe with the hyperinflation. The way that we have managed to do this trading, that people that are trading in malls, has been that they just close because they cannot keep on with the kwacha fluctuations. I can give myself as an example. We had our shop in Mandahill, we had our shop at Arcades, we had our shop at Levy, and we had also our shop in Livingston. We had to close all our outlets. And I'm retiring in my passion, which is mentorship and training. And I heard you talk about there is change in behavior. So my question would be, how are you going to impact the change inside the central bank and also to us who are listening and also who want to see the changes that are coming? Because change has definitely come and it has got a huge impact on our businesses and going forward. And as for me as a change agent, I would also like to know what kind of tools you are going to use to make sure that the impact you are communicating is really gaining those results that we desire. I thank you, Governor.
My name is Fanakeni. Mine is just a recommendation and what the bank is doing currently, more as a reactive to what's been happening in the economy. Much as we would say the bank has been slow and the ministry to react to what has been happening in the economy, it's a positive step that has been taken. However, much of the blame is to the audience here. And I think everyone in here is a graduate. I think our background in terms of social and economic development has been more on the negative when you get into employment. We don't actually add value. I'm sorry to say that. We actually get value out of that and get inflation in institutions where we go and work. I get a job today as CEO and I'm given a VX and I'm given so much allowances before I even contribute based on my qualification from my university. I get into there is no motivation to work hard. Even when we talk about running entrepreneurship companies, we don't have patience. We actually chew the capital before we actually start seeing dividends flowing. The University of Lusaka is an example. Zambia Development Agency, the CEC, they've worked so well with us. We borrowed from CEC, we paid before the due date, and we never incurred any interest. Zambia Development Agency has some incentives which we don't read because we don't have the culture of reading from the time of being in school. We only read for exams. So there is more to us than to the country and the leadership. So we need to go back to ourselves, assess ourselves, and say what is it that we can do. We look at our culture. Do we have ownership of the economic sector in this country? We have ownership of the social sector of this country. That is what is leading to the mess in which we are in. Because there is this rush now, when government borrows, it will spend money maybe on an activity that has nothing to do with economics. So you have money coming into an economy with no corresponding economic activity, which leads to inflation. And these are the things that we're talking about. So we need to come out of this. We need to re-evaluate ourselves and say, what is it that I'm doing personally, in a group, in a company? Otherwise, we'll be in the same situation. At the University of Lusaka, when you come, 80% of the constructions have been done by foreign companies because of the attitudes of the Zambians. You give them a job, they will not pay their workers, they will not finish the work. Thank you, Governor. Smart education is a recommendation.
Thank you, Governor. You may react to the comments that have come through.
Thank you so very much for those interventions. My colleague, Felix here, thank you very much for your observations. We truly appreciate that. Yes, communication is one of the pillars which we are working on. It's a work in progress. I think in my statement this morning, I did allude to one of the rationale for publishing the monetary policy report is to a move towards bridging that gap. But there's a lot that still needs to be done. So what you are saying, I think, is very much related to what the last speaker, the Prof, and the Dr. Mansa also touched on. So it cuts across. So we'll continue to make improvements. Yes, the engagements. In fact, this engagement we have today, we should have had it in Kabwe. Unfortunately, something happened which made it not possible for us to. So that's why we decided to combine the launch with this engagement. We have indeed found it immensely useful to talk to people in different parts of the country. The issues are not the same. They may look that way, but actually what concerns them is a lot more different Lusaka tends to dominate. I think those early settlers, they would have used the word bambazonke. It takes everything, Lusaka, and but point taken anyway. That's the main message. We cannot help the various opinions. People are entitled to their opinion, as he said, but the fact is that they are not entitled to their facts. Facts are facts. So this is why, for us, we try to provide the information we do so that one can assess on their own if they understand the terrain, what is being said. But we can't stop them. That's their constitutional right. But we only hope that by interacting, there will be that kind of reflection to say, no, I think we need to get more information. I think it will help a great deal if, especially we the technocrats, I think being a technocrat is a higher level. People expect a lot from us than they expect from somebody else. So our plea to our colleagues is that let's talk before perhaps you express your views from a base which may not be as strong. So, but taken. Then Mr. Sfafula, thank you too. These are indeed, we are working together with the DA to improve investor confidence. Now, I'm making a comment because oftentimes when people talk of investor, the presumption is that it's external. No, they are also local. It's included in that. Many of the incentives that the DA offer, they apply to all. In fact, more recently, ZA lowered the threshold for people, local people, to $50,000. I'm sure if we were really collaborative, which I'm afraid we are not, we would do a lot of things. We don't quite respect the contract. People sign a contract, the next day they are repudiating in court, arguing, but you signed, So that discourages pooling of resources, which makes us small all the time. That's why I think people, when they hear collective schemes, which makes higher, they rush, but then they get disappointed. The more disappointed people get, the less willing they will be to operate together. But we are losing out by so doing. Our colleagues that we see that they are strong, they work together. Not that they are friends, but they respect the contract that they sign and they play the roles expected of each other in that contract. So, colleagues, if we go in the car park here now, we'll be amazed how many cars we have. Some were coming from the same office, same institution, but each one of us is driving alone. And no pooling of resources. Imagine the amount of money locked in that vehicle. You spend thousands of dollars, but it's packed most of the time. Maybe, unfortunately, when you try to drive, you are in an accident, pay more money, So these are some of the things which we need to look at the margin. They can change a great deal. The money we are looking for, people find the money to buy a vehicle. People find the money to buy beer. In fact, someone was joking. I saw a joke where I said that, no, it's a bad Monday to Friday. From Friday to Sunday, we forget about all these things. Because look at it, maybe we have to do a study. The consumption of alcohol hasn't gone down even in this time. People are comforting themselves that, no, I drink, maybe I'll drown my sorrows. You are just making it worse. You know, when you sober up, you find that you have lost actually some money. So, I mean, these are small things, but they can go a long way to put that money together. The Dr. Mansa, we hear your pain, but I also encourage, and by the way, it's the only lady who spoke from the floor this morning, so she deserves a commendation that she could put her across. You know. You see, what I see in you, what you have said, is versatility, agility. You noticed that this was not giving you that. You switched. This is the skilling which we need also to impart in people, that when you see an obstacle, you can switch. But your point is well taken. But this is why it's an all-round problem that we have to solve. Because right now, when the Pacha was under pressure, everybody wanted to deal on the symptom. You know, said, why are you not arresting this? But it goes to production for export. Why do you need $1? You need $1 because you want to import something. So let's get more exporters to satisfy our want. But this is why we feel strongly we have to revisit this thing. Why should local transactions be also financed through foreign exchange? It doesn't make sense, but you are resisting when we say, no, can we do this? Because it doesn't make sense. I go for a haircut. I'm the one getting it here. Why should it be priced in dollars? Yes, you might have imported the clipper, but how many times do you import the clipper? You know? So these are some of the basic questions we need to ask ourselves. Sometimes we shoot ourselves in the foot. So I think your intervention bring to the fore, and that of Professor Chifanakeni, the issue of attitude, the culture that we have. We expect someone else to do something, not us. Us, we are just there to collect. It's not right. This country is very rich. And you know, this what you call demographic dividend is real. But it will not be given on a silver platter. Somebody told when we are at a forum somewhere, in fact, I can mention his name, the former president of the African Development Bank, Dr. Kaberuka. We were on a forum. Somebody said, you know what? When you have mineral resources, it's not preordained that you'll be well off. You know? People refer to Botswana, that Botswana has got diamonds. That's why they say, no, it's beyond that. There are countries which have more than that, but they are still poor. There are countries which have oil. They are poor. There are countries we have copper. Look now how everybody is looking for copper, because they try substitutes to copper for the electric, and they find that they are not doing as well as the natural copper. But how are we managing that? Are we benefiting from that? I think these are some of the questions we need to be asking ourselves. Oftentimes, you want to say, no, I want to run this, give me money. Like Professor is saying, now, who will give you money if you haven't demonstrated that your idea is solid? Because people also look at track record. Now, if I'm in a track record, there was a track record in a company which was failing, I have 20 years, and I say, no, I have a track record. Is that a good track record? Maybe you should even hide it, because it's not helping your case. So I think these are some of the things as locals, we need to talk to each other frankly. You know, discourse shouldn't be about complaining, should be about finding solutions. I recall one time we were talking with the Honorable Mutati at one point, said, you know, the way we start conversation in Zambia, and you know, the problem is, just watch your conversations. We start the problem, you know, you're already defeated from the beginning. You go south, people say, we'll make a plan, you know, I'll think about it. But we start the problem. I heard this already this evening, that the problem, no, we are capable of changing our circumstance, and changing we must. So I'm sorry about the loss of business, but it's really due to a number of things. But you asked the difficult question, is how do we change behavior? Now, in our case here, by raising the policy rate, it's a pinch that we are sending. And the pain in life has a role to play. If you can't feel pain, it's dangerous too, you know? Actually, there's a society I didn't know, I think it's Sweden somewhere, who they found that actually people were not feeling pain. They would step on fire, and they're getting hit, but they go on, they don't feel anything. That's dangerous from the psychological side, because you do things which are crazy there. And they found that actually it was a genetic deformity which needed to be corrected. So if you say that don't put that warning from childhood, you say that don't put your finger in the fire, you will get burnt. Very powerful lesson. Some of these things, countries which have gone on to be big, great countries we admire, they had to endure pain. They had to say to themselves, we have had enough. People we admire, Rwanda, for example, to say it's clean. The president said, no, we just asked ourselves, do we need money to clean our surroundings? Really? We don't. So why can't we do that? And that becomes something good. And now everybody go to Rwanda, see Rwanda. Why can't we do the same? We had the cholera here. Why? People are told, don't build here. There's a sewer line. They will build. And next, the government must look into this. So these are little things, but they define us as a society. What is of value to us? So I think since you are in training, I think you are a right partner to partners in terms of disseminating these kinds of information. It goes with also the professor there, the curriculum that is taught in these institutions. Can't we change? Don't we see what is happening? I was reading somewhere where in Japan, first 4 years of school for kids, they don't have exams. They learn life as it is. They don't have janitors in schools. They learn to clean. In Japan, they don't. Here, if you go to a table to eat, we put plenty on our plate and a lot of waste. They say, no, take what you need and the other goes to other. So there are these things we can learn by watching and bring to our life. Our schools now, we focus is on exam. Learning is not as much. We need to change. We don't need other people to tell us what matters to us in the school. So attitude is a big issue, because if you have a good attitude, you learn. But you can have competence, but if the attitude is not good, you will not go far. You know, people resent you. So we need to partner with these institutions as we are available to engage with others, so that we engage fellow citizens to play our respective roles. Each one of us has a role. We have raised the policy rate now. Others, what they spend time on is complaining about that. But you have already made the decision, it's not going to be changed. So what are you going to do about it? That's what should be to do this. How do I respond to this? others will come out of this and they say, when I encountered this, I changed this way, and this is where I am. That will be very rewarding. So our engagement here, bringing you here and you coming, not bringing you coming here, is very important for us because we feel you are the right channels through where some of this message can pass, talk to each other. What can we change? There's a lot we can change in the immediate of where we are. And adding all those will go far. During breakfast, I think we are talking with the colleagues at the table, that even a big river gets small tributaries to get full. The ocean collects all this. So don't minimize your contribution to the process. Others say that, if you think you are big, get a mosquito to enter your bed. You will not sleep. It's very small, but it will inflict the pain that will make you be aware that it is around. I end on that note. Thank you.
Thank you, Governor, for those responses. At this point, I will invite Deputy Governor Operations to come and close the session.
Good morning, everybody, again. I think for me, it's really a very simple task. Firstly, it's to thank the Governor and the MPC members for the responses. But most importantly, really to thank you all for joining us this morning. We hope that really the MPR report will be a document which helps deepen the conversations between ourselves and the various stakeholders, that it helps you to challenge what we are doing so that we can be better, because I think we learn much more from when we are challenged, rather than simply people saying you're doing well, you're doing fine. So that's really why we are putting this report out, for us to be able to explain to you and get feedback. And also thank you for the questions and the comments. The issue about how do you manage expectations, going out to the public, communication, these are all very, very important things, which I think across most central banks, it's an ever-evolving process. How can you do this better? How can you improve your understanding? How can you simplify what it is that we do, which can be very, very complicated, I think, as Governor was trying to communicate. So it's really to thank you all, and we look forward to seeing you at the next time. Thank you very much.
This brings us to the end of the session. Like DGO said, thank you very much for your time.